Clarity Act approval odds have moved above 60% on Polymarket. Here, what Clarity puts the focus on the market is pricing momentum, but the bill still faces a political clock. The confirmed detail is that prediction market odds for the Clarity Act getting signed in 2026 rose above 60%. The opening tension is concrete: whether the Senate schedule keeps the bill alive before the midterm calendar tightens. That matters for Bitcoin traders, exchanges, DeFi teams, and institutions because they have to read odds above 60% and 2026 passage market before the full outcome is visible. The first read should stay tied to those facts, not to broad crypto mood or an unsupported forecast. The baseline starts with this: the bill would clarify SEC and CFTC roles and create a registration path for trading platforms. Bitcoin, Ethereum, XRP, and Solana are treated as digital commodities under the proposed framework. The measurable anchor is odds above 60%, while 2026 passage market gives the story its structure. The related signal is SEC-CFTC split, which keeps the story tied to a specific mechanism instead of a vague market reaction. These details set the boundary for the rest of the segment: what is confirmed, who is exposed, and which checkpoint must arrive before the next read changes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is clear: federal categories can reduce exchange delisting pressure and improve institutional access. In plain English, large firms prefer defined rules before expanding custody, ETF products, or platform listings. That matters because market access and compliance planning depends on the mechanism working as described, not on a headline alone. If a viewer misses this mechanism, the story can look like ordinary volatility or routine announcement traffic. For Clarity Act, it is really a test of approval odds and whether lawmakers keep the negotiated text intact. If that condition does not appear, the setup stays conditional rather than confirmed. The direct impact lands on Bitcoin traders, exchanges, DeFi teams, and institutions. Bitcoin and broader crypto markets could benefit from clearer market structure if the bill passes. The useful change is not a price promise. It is a rulebook that reduces legal uncertainty. This is where the story becomes practical, because it changes market access and compliance planning rather than only the mood around Clarity Act. The affected side does not need a grand market narrative to feel the consequence. It needs clarity on Senate schedule. That is why the impact scene stays focused on the user, trader, protocol, regulator, or institution actually named in the facts. The unresolved part is Polymarket odds do not equal passage, and negotiated language can still change. That does not prove that final legislation will pass in a strong form or resolve every DeFi and tax issue. The evidence that would clarify the gap is committee progress followed by floor action and final statutory text. This boundary is not a formality. It is the difference between the confirmed event and the outcome people may already be trying to price. Without that proof, regulation by enforcement risk remains a live risk, even if the first reaction looks confident. Until that evidence appears, the confirmed event and the expected outcome have to stay separate. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next checkpoint is whether the Senate schedule keeps the bill alive before the midterm calendar tightens. Here, what clarity should be judged by that trigger, not by the loudest forecast attached to it. If lawmakers keep the negotiated text intact, the story gains confirmation. If political gridlock returns, attention shifts back to regulation by enforcement risk. The useful close is to track odds above 60%, 2026 passage market, and Senate schedule together, because one signal alone can misread a conditional setup. For Clarity Act, odds are a signal, not a signed law.